Hey, what up, YouTube? It's your boy Cinco, back with another video. Hey, we're gonna get right to it. It's Wednesday. This is usually my no trade day, so we're just gonna talk about important topics in this market. And today, video is gonna be based on finding key levels in the market. Now, you can use this on pretty much any chart that you pull up. You can do this on equities. You can do this on Forex pairs. You can use this on indices, commodities, you name it, crypto. Any chart you pull up, this will help you find key levels. So make sure you stay tuned. After this quick little intro, we're going to get right into it. Bang! All right, so we're looking at the gold chart right now. This is gold. Like I said, you can do this on any pair. It doesn't really matter. You can do it on any Forex pair, any indice, commodity, equity. It doesn't matter what chart you're looking at. This is all relevant to any chart. What I do is I like to start on the daily level or the daily time frame to be able to find these key levels. You can either use a horizontal line or horizontal ray. You can use a rectangle box to mark these levels off. It's strictly your preference. For the sake of this video, I'm just going to use the horizontal ray tool. What I'm looking for when I'm looking for key levels now, I'm looking for areas in the market where price made a drastic reversal and created a strong leg push. Now, if you notice here, I'm looking at, we have a level here, we have another level here, and then I have a small little mid-level about right here. Okay, so I personally like to start with the wicks, because wicks is where price, that's only way you're creating these wicks are the banks. The banks drastic, like retail sellers aren't able to create these drastic turns. These are orders, pending orders by some big money players. There's a lot of liquidity coming into the market at areas where you just see this drastic switch from. So I like to pay attention to areas like this. Like I said, price came up, couldn't break it. It immediately created a leg down here. Okay, came right back to that level, created this next leg here. Okay, so you got one leg, two leg created, another rejection here, back to this level here. Okay, before you see here, you see this level where price was not able to reject and get below it. And then you got this big wave here, okay? Now, what we're looking for in my style of trading is I'm looking for breaks and retests of like key market structure levels. In areas that have not been retested yet are prime zones for me to enter, some higher lot risk trades. Where I'm willing to risk a lot more of my account to catch a decent move, just because we're at a key level and we may see a lot of volume push from that level. However, now you have resistance. You see resistance, and then you get a breakout. We got a breakout. Now, if I zoom in here, okay, mind you, this is the daily chart. You get a breakout of this level here on this leg here. Price has not shown any type of retrace into this level to show us this old previous level of resistance is now acting as support. Now, in a clear uptrend, you're going to have higher highs and higher lows form. Those higher highs and higher lows are going to be essentially breaks and retests of the market, where you're going to have old resistance levels turning into support. Okay, so we got the resistance break. We've seen the resistance, plenty of touches in that resistance. Even here, you see touch here, resistance here, and then what happened? You get the breakout. No retest yet though. Price has not came back to retest that level. I would be looking to enter the market once price actually comes back down to retest this level. Then we get interested in looking at taking some type of high lot size, high risk trade setup, just because it's off a structure and it's flowing in the trend of the market. Now, do I take this trade on the daily chart? Absolutely not. I do not take these trades on the daily charts. I am not a swing trader. However, this is where I find my key levels to actually enter the market. What I do personally is I would go down to a smaller time frame, starting with the H1, and then work my way down to the M15 and the M5. And then I look for patterns when price gets to those levels that we have marked off. I need to see some type of engulfing candle, breaking some type of structure at my levels, then I can enter the market. I need to see the volume come in from a key level, then I can enter the trade, comfortably enter the trade. Now, you can definitely look for setups right now if you were trying to. However, that's going to be a lot more risky, just where we're at in the market. Like I said, we did get this nice breakout of this resistance level. Price is like a magnet at these levels, and these levels act as magnets, and price is going to want to come back to this level at some point here to retest that most likely before it gets till it starts running and creating more all-time highs. You're probably going to get some type of retest of this level. So just be patient. And then this also helps you find patience in the market, knowing that, okay, where price is currently at, we're not really in range for a setup right now. Unless you're looking for a counter trend move where you're trying to sell price back down to this level, and you're knowing how to manage your risk and go about the trade that way. But you got to understand that's counter trend, and it can go against you at any time. The market can do whatever it wants, regardless of what we think it's going to do or what market structure says it should do. It's going to do whatever it wants. So you got to be able to protect yourself from that. You got to be able to put yourself in high probability situations, and buying gold at this high level is not high probability. I would say more high probability setup, like I said, is price coming back down to this level, showing some type of rejection, some type of wick rejection, some type of engulfing candle coming from this level on the smaller time frame, and then you can tighten your stop loss, get a sniper entry to be able to ride this thing up, and then trail your stops as the market goes, and you can just flow with the market structure. That's the best way to go about trading. That's how I go about my trade setups, and that's pretty much it. It's not to say that my way is the right way or the only way. There's tons of ways to trade these markets and make some money consistently. So this is just my way. So remember that going forward. If any of this helps, if any of this makes sense to you, please drop a like, subscribe to the channel. I will be coming back with more content, more knowledge, more information, more videos like this as I think of things that'll help you guys grow as traders. So definitely stick with me, rock with me. And to the next video, deuces.